back with Back. The series continues for secrets for profiting in bear and bull markets. Back. What is that? Bank of America Corp on the New York Stock Exchange. I'm not very good with tickers. There's some that we can't get around there, like Apple and those staples. But there's a whole bunch I don't know, and maybe it's better like that. The less I know, the less I let myself influence by whatever noise is out there, whatever's out there. Your subconscious, right? It acts on you and can make you go on land on an emotional landmine. And what I mean by an emotional landmine is anything outside of your framework. A framework is built off emotions, right? You can't really say, oh, when I feel fearful, I'm gonna bail. Well, I guess maybe you could. Hey, that could be a new strategy, new trading framework based on emotion. If you feel greedy, you buy more. If you feel fearful, you sell all. But that's how most people, since people don't even have a framework to rely on, that's their instinct. And even when you do have a framework, you have to fight off that instinct. And the more you practice, the more you become a robot, the better it is. So if you have to lay off Twitter for a while, or the news feed, or CNN, or whatever, then so be it, until you reinforce your emotional IQ and you're able to respect your trading framework. What do we have with Back? We had a nice stage 2 right here. And notice I'm keeping those Ichimoku clouds. Hope I'm pronouncing that correctly. And they just help me visualize where the resistance or support is going to be. It keeps 26 periods ahead and it evaporates older resistance or support. So right now, see, I was in an uptrend and there's no resistance being created, only support. And that's eventual support that I might run into after breaking down from the 30-week moving average. Before it breaks down to a stage 4, I have to work my way through that support. That's a pretty cool trick that Isa Trader from the handle from stageanalysis.net, I believe the creator and the moderator, administrator over there, and it's kind of really insightful. So I'm going to keep doing it for Stan, and he uses it like this here. Before declaring it's a breakdown, even if he has the volume or a pattern, he rarely enters a trade where he hasn't gone through, the price action hasn't gone through that resistance. Not bad. Right here, it didn't go through. So even if you had a single or one or two of Stan's singles, you still wouldn't have entered. And what's happening now is the more the period is, the more we stay in that stage 3, the more that previous support evaporates, and you're just creating a very thin cloud of support and resistance right here, just moving along. So the next breakout, that's probably a good representation when you know you have people say the longer the base, the higher in space, and the tighter the formation. In classical charting patterns, if you have a tight formation where you have like 8 to 10% price variation, your target's even it's 3 times the implied measure move. And the clouds represent that very well. So that's why, like, there's some indicators I don't know, and I dabbled with a few, and they all kind of overlap. So if you do just classical charting principles and you read the chart correctly, or all this cloud information, the resistance and all that, it's already accounted for. You kind of take decisions based on the chart pattern, and the chart pattern already has taken into account some of this resistance and support. But if you're still getting used to it, this is a very good way to see how that support. It's a leading indicator. You can see it right here. Hey, what's that there? You can see it here. You have the candle stop here, but you have 26 more periods ahead. Why? Okay, there you go. Just put the... So right now, what do we have? Wait, that line's crooked. We put that at the 0% mark. Okay, here we go. And that was so next breakout or breakdown would have been good. And right now it decided to break down. I know Stan, he says fear is there's no need volume for breakdowns, but I did notice that fear accompanied here, you see with this under this breakdown candles, high volume is also a good sign for that triple confirmation. RSI going into negative territory over the halfway point. Here's my breakdown candles volume, and here it is right there. You had a small stage 4. Always have your risk and money management protocols in place, so in case the trade reverts and you don't have a chance to move back your sell stops before getting triggered out, or before you have a valid trend line that's there that permits you to exit, take half your position. Always protect your NAV. Always cut your losses. Respect your trading framework. Don't say, it might come back up. If your trade framework says to sell, you sell. Live to fight another day, and you won't be chasing Hail Marys. If you keep a trade, instead of you losing your 1%, you lost 2. Then the other one, you lost 2 instead of the ones. And then eventually when you're looking for a winning trade, you're looking for crazy skewed risk to rewards, which lower your probabilities of reaching those targets. And then you're in downward spiral, man. And then your NAV is just a few clicks away from a total meltdown. So protect your NAV, protect your NAV, protect your NAV, and protect your NAV. The rest is it's noise. Stan's system is great at letting your winners run and your losers cut your losses fast. The way he moves his sell stop is a manual way of setting his sell stops, and he lets you run stage 2s or stage 4s as long as possible. So right now we have it here. No red cloud above, so no resistance above the 30-week moving average going upwards. Here's a launching pattern, and here's the volume right there. So here you didn't get greedy. If you only lost 1%, you'll see in this next move you're going to make up for way more. The volume's there, the RSI is there. I'm looking for that triple confirmation. It's already pretty much in the positive territory, but it keeps trending upwards. That's good. And then it just skyrockets out. You would have entered right here. Sell stop for investors below the pattern. Right here. And traders 4-6% below the breakout line. Below round number. Always to protect yourself. And here it goes. Price goes up. Here's a pullback. And price goes back up. Do we have a trend line? No, we don't have a 3-point trend line. I know stock chart says 2 points trend line is valid, but Stan goes for the 3 points or more. Let's see if I have one. So that's why Stan's system is a little bit more work. You always have to look at your chart every week and see if the candles more of the chart where you have to another trend line, or you're approaching a 30-week moving average. 1, 2, 3 points. So right now price action went up. Traders and investors take half your position on a violation. So you would have taken right here, you would have taken half your position out. And the 30-week moving average was right about there, and it's a full bailout for both you guys when that's violated. So pretty damn cool, right? You rode all that. Yeah, sure, the stage 2 went up. This is hindsight 2020. You don't see that. But when trend lines are violated and 30-week moving averages are violated, it's like staying after midnight outside. Never good. Only bad stuff happens after midnight. You don't know how long this can consolidate. This could have easily went back to a stage 4, but it just happens that it continued here as another stage 2. Right about here, we're at that pattern above 3-week moving average. The only thing though, let's put that straight on this candle right here. Not much volume right there. So it's one of these candles. It's breakout candles. This one, there's not that volume. So I don't know. Stan wouldn't trust it normally. Maybe wouldn't have either. What happened though? You could have said, okay, I don't have my volume. I'll let it go up. And within 1 to 3 months, usually you have the pullback. 1, 2, 3, 4, 5, 6, 7, so 8 weeks. You have the pullback to the breakout line, and then you have volume on that candle that goes back up. You have a little bit more volume. So you could have probably bought it after the pullback, and when the price starts going near to the previous high, then you could have went in, or you could have bought just at the pullback with if you had volume. If you have pullback on low volume, very good sign. Pullback with low volume is a stock. I'm not gonna say the word screaming, but it's telling you, okay, you missed the original breakout. I'm telling you, I'm pulling back on light volume. Get in. You have another chance. And lo and behold, you keep it going back up. Always look for low volume on pullbacks and high volume on breakouts or breakdowns. And that's a very, very telling sign for A+ candidates. And the price action kept going up. And you see all this? This is support being created, eventual support. And protection in the future. And right now, the more we're moving in time, the more it's evaporating. So that trend line here would have been out, and now there's a new one. This could be our trend line. It's below 30-week moving average, so we don't want that too much because we're going to be bailing anyways when the 30-week moving average is violated. Oh, here's a nice one. 1, 2, 3. So if you're in right now, you have this nice aggressive trend line where you would take half your position if ever it's violated. 1, 2, 3. So if ever it breaks below here, you're out, and that's all right. That just means maybe we're gonna be entering a stage 3, which could become a stage 2 or stage 4, and you could just have a sideways pattern. You don't know how long it's gonna last. Take your capital, go somewhere else, and wait until that resolves. Try to find some other stage 2s that are just starting. Go find some stage 4s that are starting. And it's no use staying in stock because it treated me well, so all this long, well, sink with the ship then. Forget this is back, whatever it is. Could be ABC. It is ABC, but BAC. And just look at the price action. Whatever these fundamentalists, P2Es, newsletter, whoever's buying, for whatever reason, it does not matter. As long as they're buying, as long as their price action is seen in the chart, is seen in the volume, that's all you need. The rest is noise. Look at that. I set my nice 2 alerts for back. Still in stage 2. I'd like to maybe enter if ever I get a breakout with high volume. I'm in. If ever I get a breakout with not a lot of volume, I'll wait for the pullback like was here, and then I'm going to enter. Or else it's too early for stage 3. It could become a stage 3, but this doesn't become a candidate anymore. We just have to wait out a little bit. So this is how I'm going to leave back. There's probably a continuation play right here. You have to make sure that it doesn't start hitting the 3-week moving average. After that, that means the stock might be rolling over, and we don't want to be in it while it's churning and while it's figuring out if it wants to continue or not. But we want to be in if it gets close to 30-week moving average like it just did here and pops up. A lot of Stan's charts in his book for continuation moves, they all look like this. Explosion, 30-week price action goes super high, pulls a 30-week moving average an aggressive angle. Price action starts to slow down, consolidates, and comes and touches the 30-week moving average. And then after that, it pops up and explodes if it's a continuation move. Like this one. This is a typical Stan continuation move. So let's see what happens here. Maybe a few more candles. Let the price action reach maybe 30-week moving average. Have a bounce off that, and continue. All right, that was short and sweet, but keep an eye out on back, and I have my alerts, and I'll get back to it as soon as possible. All right, guys. See ya.